Good morning. It's Steve and Taff from Signal Centre, and we're good morning to Talking Bull. Nearly forgot the name of the show. 28th of October. It's a Friday. It's finally Friday. Friday's here, and things have hotted up towards the end of the week. We're going to dive straight into the headlines and going to go through it. I know sometimes we're trying to get a sort of like a bit more of a notification for traders to sort of give them a bit more time. The notification goes out when we go live. So we're going to try and get a little bit of a longer countdown, which some people who are sharp might find a little bit frustrating, but hopefully overall it will be fine. Let me just try and get my sheet up. Yeah. So ECB did hike by 75 basis points, rates now at 2%. And this was in line with market expectations. Deposit rate was increased to 1.5%. And the highest rate since 2009. Oh dear, those days of 2009. The central bank also removed a subsidy on the long-term TLTRO loans to the banking sector in order to curb liquidity. So trying to slow down those long-term loans to banks. Bank President Lagarde stated that the bank had made substantial progress in withdrawing accommodation. She added that the inflation remains far too high, while further economic weakening is expected over the remainder of this year and next year. So although further economic weakening is expected, rates are going higher. Not a great way to do things, but anyway, we soldier on. US GDP increased at an annualized rate of 2.6% after a 0.6% decline the previous month, and a slightly above consensus forecast of 2.4%. Exports, consumer spending, non-residential investment and government spending all made positive contributions for the quarter, while inventories and residential investment declined in the quarter. US Treasuries posted further gains on Thursday, with the 10-year yield dipping below the 4% level. The yield held below the 4% level up until today. Elon Musk completed the purchase on Twitter on Thursday, but equity markets were unsettled by another earnings miss, this time from Amazon. Although industrial stocks were more resilient, Asian bourses posted sharp losses on Friday. We'll dive into how NASDAQ fared on that as well shortly. The Bank of Japan made no changes to monetary policy, as expected on Friday, with the bank still targeting long-term rates around zero. There was, however, a slight hint of a shift, with comments that higher inflation expectations should put upward pressure on inflation. So that's where we are this morning. We, as technical analysts, we like to see what the charts are saying. So let's dive into the charts. We'll get Taff to run through the commodities and cryptos, and then I'll dive into the forex and indices. So
did you see the Elon Musk clip when he got into the Twitter HQ?
No,
and he was holding like a sink, right? Like a sink, and then the caption, and then he tweeted that, and then guess what the caption was? Let that sink in.
What?
That guy's just hilarious.
That's frightening. I love his sense of humor.
He's so hilarious, man. It's like, let that sink in. I'm here and I'm here to stay. So and then he was holding like a literal sink. Crazy. So anyway, let's see what happened with oil yesterday. With a dodgy candle on Wednesday with this bullish candle here. This is good momentum here. Was pretty much a follow-up of this engulfing that we had last Wednesday. So we had that again on Wednesday, this Wednesday here, and I think this is really pretty much dictating the pace. Although yesterday we had a dodgy price came to this zone, this 85. Let's go to the intraday. Really see the zone and really map out what happened yesterday with price. So yeah, so on Wednesday we broke this zone here, this 87.14 to 87.70 zone, and then yesterday we came back down, we tested it, and it held. This would have been a good intraday trade for someone. I mean, if you go on a lower time frame here, you see that this was like a bullish engulfing. This would have been your good entry because it's at a demand zone, so targeting the first resistance there, that would have been a good entry. So let's go back. So it tested that zone, and then it went up. It couldn't it saw resistance at the first resistance, and there was supply here, and then from here price is going down. This is what we're seeing now. We seem to be approaching that first support again. It might hold, it might not hold. If it does hold, then we're looking to again target the first resistance and possibly even go to the second resistance, which is 91 91 to 91.60. It's a zone pretty much, really. Yeah. So if this holds, then we're going up. If it does not hold, if this breaks down, then I'm looking for price to be kept by the second resistance, which is 86. So I'm really I envisage this to be a limiting factor on the downside in terms of price if we break this. But I'm bullish crude oil, so I'll be looking to buy any dips. But my preferable spot is probably this, yeah, this second resistance at 86. That would be my preferred spot to buy crude oil. Let's go to gold. Let's see what happened on the daily. Okay, here we go. Yeah. So we had so yesterday again on Wednesday, like every other commodity, gold went up, and with this really nice bullish candle here, it shows that the bulls were in it, and it approached the resistance zone 1672 to 1679. It couldn't overcome that, and then yesterday we had a dodgy candle. It's a dodgy kind of hanging man kind of candle that we had yesterday, showing that the bulls had lost momentum and possibly the bears are now in control. uh, what does that look like on an intraday basis? This is what we have here. So you can see that yesterday we had this triangle, this small little compression zone here, this triangle formation here, and price broke out of it. And as is the custom with price, if it breaks out of a formation, it comes back to retest it, and then from that retest, we're seeing that that bearish momentum come down here. So it's basically a retest of that trend line that we broke here, that triangle formation that we broke. So we have support here. This is weak support. This dashed line, weak support at 1652. But the ultimate support zone is probably 1644. I think this is where things are likely to happen. If we're going to get any change in the trend, probably it's going to happen here. But we have another one that you should take cognizant of, which is 1652. So we seem to be we seem to have bearish momentum with gold. I think it's a follow up of yesterday's hanging man dodgy candle here. So that is what's running the show right now. My cap for today is this second support, 1644. And if we get bullish momentum, I look for the upside to be kept by, again, this resistance zone that I highlighted, 1672 to 1679 8ish. So these are the two levels or zones that I'll be looking for entries and exits there. Let's see what happened with nat gas. We had another hanging man with nat gas. Bullish momentum on Tuesday, which was very bullish. We're anticipating that probably we're going to retest this trend line here. Let me just, for the benefit of those who were not on the show yesterday. So we had a medium-term trend line that supported price, I think, several times from January. So after price, after this zone that I highlighted here, after support held on Monday with a bullish momentum candle, on Tuesday we had another bullish candle, and we're anticipating price to go up all the way, but it did not. Instead, we had a hanging man candle. And whenever you have a hanging man or a dodgy candle, it shows you that whatever trend that was there before is probably going to reverse, and that's exactly what happened yesterday with a reversal of the bullish trend, that the bullish correction that we're seeing. So on the intraday, really, I spoke about this. I think it was my gun to the head trade at yesterday or the day before, and this seemed to be this was like a double top formation, and we broke the neckline here, and I think the measured move target was somewhere there. So it really played out to fruition here. But what we're seeing here is a resumption of the bearish momentum that started from when we broke the trend line support here. So we're seeing a continuation of that. I envisage first support I envisage price to target the first support zone here, which is our 5.35 to 5.49, 5.50. I think this would be the target for on the downside. On the upside, I envisage the 6th level here to be a barrier for price. If it does overcome this barrier, then we also have this small little trend line resistance. So it's quite it'll be quite a it'll be quite a hard task for price to go and overcome these two resistances and go all the way up there. So for today, I'm really bearish on natural gas, and I see I envisage price just going down and targeting our first support there. We have a second support which is at 5.2 or 5.0, but I don't see this playing out for today. Today I see this is the zone to play at. Let's go to Bitcoin. Let's go to Bitcoin. Bitcoin has had like a really good week. You know, it's I think it's like it's mimicking the indices, the US indices. Really, our week started on Sunday. We broke out the 19,300 level. On Monday we came back. We tested that 19,300 breakout zone. We took some liquidity, and on Tuesday we had really convincing bullish momentum. Just like Wednesday again, we had really convincing bullish momentum. And then this momentum on Wednesday was capped by the 2830 level, which was, if you can see here, which was support at, I think 18 August or 19 August. It was support, and then now it became resistance here. So price couldn't overcome that. Let's see what it looks like on an intraday basis. Yeah, so that's 2830. That's the second resistance that I put out here. Price came all the way up. We couldn't overcome that. We couldn't close above that. And from there, we've just been trickling lower and lower and lower. And to me, it seems we're really retracing the bullish move that we saw from this triangle breakout here. Let's just see something. I think we should be close to a that first support zone should be close to a 61.8, I think. Yep. Yeah, it's close enough. Yeah, it's close enough. So I think the really the area to look out for is this 61.8 zone here, which is 19,960 or 19,920 zone. I think this is probably where if we're going to go for longs, I think this is where you want to take your longs, and it'll make a good nice retracement and a continuation of the bullish momentum that we saw. So that's on the upside. On the downside, again, we can see that this, if I expand it just a bit, yeah, it does look like a inverse head and shoulders formation of some sort, right? It does look like that. So on the downside, I don't know. I'll be looking if I'm going to take shorts on this. Really, I want price to probably come to the first resistance here. Get some convincing liquidity at 2460, and then from there I'll target probably take some off at the first support there at 19,960, and then ultimately probably target the second support, which is 19,300. That's the bearish view. But my bias is bullish on Bitcoin, and I look for the bullish momentum that we saw at the start of the week to continue. But being bullish, I'll be looking to take my longs in this. Just where's that little circle thing? Yeah, there you go.
Yeah, I like the circle thing. That looks cool.
Yeah. I'll be looking somewhere here. I think this is where I want to take longs if I'm going to take.
Don't take longs in Bitcoin, Taff. You know, if anything, just please learn from me that it's going to zero.
It's the charts, man. It's the charts. I'm not married to any
opinion,
man.
it's fair enough.
I just take it as it comes. So yeah, I think that's it for commodities and crypto for me. Over to you, Steve.
Taff. Cheers. Okay, well, some interesting things to look at, both in the FX world and also indices. We'll start with FX, like we normally do. I'll look at the dollar first, then I'll dive down into a couple of pairs, the majors, really. Looking at cable in particular, lots going on there. A few guys on the stream really sort of getting excited about the potential bearishness of cable sterling dollar. So let's look at the dollar first. Remind ourselves of the dollar very quickly. I'm not going to go into the detail of this, but dollar is bullish. still bullish. We've had a little bit of a pause here. We've had a retest of support, actually broke through support this week and has bounced higher. So the bullish trend continues on a long-term basis. The daily chart, very interesting indeed. We've had this decent sell-off all week, but hey ho, look at this lovely bottom candle from yesterday. Now that for me is a real sort of sign of potential for further upside on the dollar index, and we've got off to a great start this morning. So yesterday, after a close like that, we got taken out most of the previous day's bearish move down. We're back up above, so we're back clearly above support at 110. We actually got down to 109.50. Our trend line support was a bit lower than that, down at 108.80. Buyers came in before that, so there wasn't any opportunity to really get long with this trend line, but the turnaround looks to have started. And I think if we think about why the dollar has turned around, obviously it's this raising rate environment is not going away, and the ECB, by raising 3/4 of a basis point yesterday, have confirmed that. And that really is, if you think about the last time rates were at 2%, it's back in 2009 on the in the Eurozone. And that's a big move. And what she said afterwards, Lagarde said afterwards, it looks like we could go even higher than that. And that will be a thing, because ECB throughout history, I mean, I've traded bunds all my life. Throughout history, the ECB has never been one to like to move rates. So it's a big marker. And this has led to this sort of like nervousness around the indice markets and the strength into the dollar again. So let's take a look at, well, actually, let's dive down into a little bit more of the short term. Remember this formation that I picked up, this inverse head and shoulders formation, broke the neckline and looking really good. So that's played out really nicely from yesterday. Potential measured move target from that. Let's just get a like the Fibonacci trend base. That'll give us an idea around about 111.50. So that's the upside, and that's only a small correction really after this sell-off that we've seen. Let's take a look at euro dollar. Euro dollar yesterday, bearish engulfing candle. And actually, I could call it a bearish outside candle. So that'll do for me, Donkey. That's absolutely fine. Obviously, we broke out this channel, this downward channel, but we're right back on to the top of that channel trend line. So it's a reverse trend line. So there may be a little bit of support around here. It won't be much though. And we've got off to that negative start today as well. So further downside, we had a little try to recapture ground, but bang, back down. So not looking great from that perspective. Cable, this is an interesting one also, and remind ourselves really where cable has been and gone, and everything that's happened. Obviously, the British politics in chaos, and that led to the real aggressive breakdown. And for me, the real level of support was back at this 114 level, which we had a swing low down March 2020, around the start of the pandemic. So for me, that was always a key level. A break below there, close below there, initiates for me a longer term move to 85. Now that's a bit frightening. So we've had a bounce back up. We've had a recovery from around 103. Didn't quite get down to parity. But again, for me, we really need to get a strong close above the 114 level to stave off the negativity. And at the moment, we're not getting, well, we're getting it at the moment, but is there time today for this to give up those gains? I mean, if we look at where we are, well, 115.16, what's the average range we get in cable? It's around about, was it 200 points? Looks like, let me get this chart up. Here's the average ranges. Yeah, we're seeing like about a 2-point range. So today, what's the high? The high is 116, potential for a 114 low. That's sort of like the way I'd sort of like really round it off. There is potential for further downside on the day in cable. Yeah, so it looks pretty bizarre. dollar yen. Now, again, dollar yen is obviously affected by the dollar, as we see, but look at this candle from yesterday. We had this support level at 145. We got down to 145.10, not very far away from it, and the rally. And look at that rally. That's a like a dragonfly doji almost, like a bullish hammer. It's sort of, it's a positive candle, although it's a sign of indecision. I would take it as positive because the tail is a lot longer than below the body than the head is. So and look at the reaction today, and this would form, we get a nice close around these levels or higher today, that would form a morning doji star, and yeah, further upside should follow from that. So feels like a complete turnaround. The dollar saved itself on Thursday. Thank you, Lagarde and co. So let's take a look at the indices. And the first one I'd like to focus on is the NASDAQ. Well, yeah, NASDAQ, and I'll flip to the Dow as well. So NASDAQ on the weekly chart. Oh, let's get the weekly chart up there. Obviously, seems like we posted a really nice base at the 10,430 level. Got a really strong rally last week, brilliant. And we had a further stronger rally up until yesterday. Got up to 11,677, which was the week of the Monday, 3rd of October, that high, and reversed. And that's like almost like a shooting star type candle. It's a big rejection on the weekly time frame. So we're back down to, I mean, I think we call this maybe a Marabuzo from last week. We're back down to the midpoint. So there were, we've been through the midpoint, a little bit of support around here, but let's have a look at the daily chart to see how that's played out. And we were hoping for this inverse head and shoulders, and it broke up nicely, looked pretty good. So Tuesday, I'd been really happy with being long of this. A bit of a stall Wednesday. Thursday's just absolutely smashed this. Really looking for a break below the 10,900 level would basically wipe this this whole formation out. Otherwise, we could get a more complex inverse head and shoulders formation with two right shoulders. So think about that. That really, it's at these levels, it's very difficult to sort of like dive in, but a break below the 10,900 level would open up the downside further and really start to retarget, refocus around that low, the swing low we saw at 10,427. So bear that in mind. Now the S&P for me, we got up to that 127 extension. As I was talking about the morning doji star formation, this is an evening doji star formation confirmed yesterday. It's a three candle formation. We had the rally, the indecision or the doji, or dodgy, as we like to say in Zim, and then we had the sell-off. And that for me is the formation complete. So a sell today is potentially the way to go from a risk reward perspective, or from a technical perspective. That's where it's screaming out to get involved. So last 5 hours have been negative, looking pretty poor. The DAX, again, I like this on the weekly chart. Look at this. We've got this trend line, downward trending resistance we drew weeks ago. 1, 2, 3 great points. We talked about the potential for it to get up to here this week, 13,290. It actually got up to 13,260, so 20 ticks short, not bad. And the turnaround again yesterday, bang, straight back down. So for me, this trend line is respected again. And if we close around these levels on the weekly chart, although it'd be a positive week, I'd be very, very nervous about this corrective rally, corrective move we've seen over the last month or so coming to an end quite dramatically, quite quickly. So still got a bit of a chance there on the DAX, but obviously the interest rate rise yesterday would have sort of like confirmed that the outlook isn't great. On the daily chart, again, we've got these signs of this I know it's it's a bit messy. I'm trying to give the bulls hope with this. Let me just try and get rid of this bullish channel here. Yeah, again, This is the long-term downward trending chart. The resistance was up here, didn't quite get there. Evening doji star forming. So further downside, especially if we can confirm a lower close today. A break below 13,000, and we could be accelerating the downside of that. Finally, take a quick look at FTSE. Again, this is the inverse head and shoulders we've drawn. It's broken through the neckline, but the neckline from the head to the right shoulder, I always feel is important, especially in an inverse head and shoulders formation. And we managed to close above there. Could say we closed above it once, twice, 3 times. So, but today's price action doesn't look great at all. And again, you've got the sign of an evening doji star formation. So that's looking pretty ominous, I think. Could be further downside. Let's take a look at dollar CAD. I'll jump back there. That's us done in the indices. Anything else, just give us a shout and we'll try and cover. Let's take a look at dollar CAD, because I like looking at dollar CAD because there's a lot of oil influence in here, and I love oil. Yeah, so obviously the dollar strength has turned around. We've sort of like, we broke below the support which we had at 135.03, got down to 134.95.5, and bounced really aggressively. So a nice turnaround in that on the weekly chart. So looking a bit more positive. Let's take a look at dollar CAD's daily chart. Again, we're getting this morning doji star formation, this bottoming formation around about previous support. So that's looking pretty good, and a good strong move higher at the moment. On a shorter term basis, what levels are we looking at? We're looking at levels of resistance all the way up to 136.50. We're trading 136.06 at the moment, but a really strong 4-hour candle here, a bullish engulfing candle, looking strong and taking out the previous price action of about 10 candles. So that's a really strong move, dollar CAD, looking pretty decent. And if we take this previous swing high and maybe draw a trend line or a potential trend line, or even take that one there, that's all broken above the downward trending resistance. That's quite acute. So looking quite tasty around these levels. Obviously, we've seen the sort of like prices around these levels being sold into previously. Can this be a bit of a change? And finally, sterling New Zealand dollar, take a little look at that. Oh yeah, I love it. We love a head and shoulders formation, don't we? 4-hour chart. Let's just draw this one on quickly. Take the rally, left shoulder, and these are the sort, and right shoulder. And these are the sort of formations that you sort of think, oh, it's too late. I can't sell it now. The high's all the way up here. This is where my stop is. Well, yeah, unfortunately, that's how these formations work. They have quite big levels of risk. However, you know, you really for the true sense of the word, you wait for a break of the neckline and then you trade it accordingly there. So the neckline, let me just highlight it here, is here. So when we get a break of there, that's the head and shoulders formed, a close below there on the 4-hour chart. So what people tend to do, especially traders like myself who are really bad traders sometimes, we get ill-disciplined and we want to preempt this. So for me, let's take a look at that. So that is basically where I'd be, you know, that's, think about the risk reward. And I'm sort of thinking, well, there's potentially, if I get short here, of like almost like a, well, let's do the measured move target properly, shall we? Right, there you go. There's the measured move target. 5.5 to 1 risk reward, or 5 to 1 risk reward if you want to give it a little bit more room on the upside. That's not bad. It's not bad, 5 to 1 risk reward.
It's really good.
But it's 5 to 1 risk reward for a reason. Yeah, yeah. So, but it is high risk because, you know, if you were to bet on anything and it was 5 to 1 or it is evens is going to come in more often. The 5 to 1 isn't. But when we see these formations, I like these formations. They happen a lot. Just bear with me 1 second. Sorry about that. Yeah, so they're 5 to 1 for a reason. So bear that in mind. But yeah, for me today, I'm excited about the gun to head. I just feel like the DAX is ready for a big smash off today. But anyway, we'll jump onto that. I'll let Taf go first, unless he picks
the
DAX.
one that you. No. Well, it's similar, but it's not the DAX. Don't worry.
Well, this is the part of the show. If you're joining us for the first time, that we, myself and Taf, sometimes Joe when he's here, when he's not holidaying, like he always does, we take a trade idea that we've looked at, analysed, and we look at initiating a short or a long. We put the trade idea out there. We put it onto our TradingView platform. And we target at least a 2-to-1 risk reward trade, not a 5-to-1 like I've just shown you. 2-to-1 risk reward. Well, we can do 5-to-1 if we want. And we target a stop and we target a target, and we also have a stop 2-to-1 risk reward, or it expires at 9 p.m. UK time. And that's what we do. Whatever it is at the UK time, if it's on side and it's half an hour on side, 0.5% on side, we'll take that as a win, 0.5%, and we build up that. So the track record's looking okay. We want to sort of like push to new highs. Maybe we can do it while Joe's away, Taf, because I've got all the confidence in the world with you. So what are you going to throw at us this morning?
Cool. Maybe just before that, let me just. This is what I did yesterday.
Oh yeah, what did we do yesterday?
Yeah.
Silly
Yeah, I need to show off, man. So I was shorting.
Oh, here we go. Here we go.
So
You wouldn't have said anything if you'd have lost.
Yeah, I wouldn't. I was just gonna skip it, man. Yeah. So I was shorting natural gas at market, and
Oh wow.
and then I like hit by 4 p.m. and I did TP. So that's a 2.58 in the bag.
I mean, that didn't even go against you.
No, it didn't. It
if your
didn't at
stop
all.
was even, if you made your stop smaller, then the risk
If I
reward would have
if I
been
put
huge.
my stop, probably I was gonna make a 4 or 3.
I mean, more than that.
Yeah.
What was
But the
it? Would
thing
you
is,
end up to what?
So it's 2.58.
Nice.
Yeah,
Nice.
not
Love it.
bad. Not
It's
bad,
not
eh?
bad. All right, let's
Yeah.
look at how I did, because I forgot to show you. But I tried to do this. Oh, yeah, there you go. Well, look, I closed on side. I was looking for 2.5 yesterday on this as well. I did close on side, but not much. So about $3 on side. Sold it at 16.61. I think it closed at 9 p.m. at 16.58. Hasn't gone up and hit the stop yet. So that,
Yeah.
that's it wasn't bad. I feel I sold gold yesterday after doing this, and I feel like that's for me, that could be still play out to the downside nicely, because this resistance around that band of resistance.
That's really it's going to be difficult. You need a lot of momentum or a really good catalyst to overcome that. Yeah. All right. So let me go to my gun to the head for today.
Yep.
All right. Is my screen on?
No, let's go here. Boom.
Cool. There you
That's
go.
you.
All right. So I'm going to play. I'm going with the Dow today. We are at a supply zone. This 32,200 to 32,500. We can see that when we broke it in August, right? We came up, we tested it, but upon testing it, I mean the bearish momentum was so big that it just gapped down, and just look at that candle there. Just shows you that there's a lot of supply in this zone, and we're testing it now, and already we're rejecting it. This is on the daily. Let's go on an intraday and see what it looks like. There you go. So on an intraday, we actually have it looks like a inverse head and shoulders or some sort, right? So yeah. All right. Oops. Let me just put that in here. Yeah, there you go. Yeah, it looks like an inverse head and shoulders or some sort. So I'm going to short that at market, and I'll put my stop just slightly above this swing high here, or maybe equivalent. But then my hope is that price doesn't even come in this blue zone. So I'm hoping that at the open that it's just going to go down all the way down to my take profit, which is that level there. All right. So Yeah, so I'm selling at market the Dow at 32,048, and my profit level is 31,138, and my stop is at 32,416. That's for a 2.47 risk to reward ratio.
Yeah, that'll do.
So
Nice. Yeah.
yeah, we'll
Okay,
see how
we'll
that plays.
take that 2.47.
Yeah,
Not gonna kick that out of bed. Excellent. Well done.
build it
Cheers,
up.
Taff. I'll let you publish that, and then I'll
Yeah,
dive into mine. Here we go. Germany 40. As I say, I like this. Sold this. Let's see what it's looking at. So, yeah, risk to the upside is around 13,260 if we manage to get above yesterday's high. But it could take, as it's a short-term intraday trade idea, could take today's high as the stop level, 13,183. Trading at 13,090 right now. So this, for me, looks like an evening doji star formation forming. So yeah, yesterday's doji is the one that's going to drive this trade idea. Looking at it, we can see the signs of a topping formation, almost head and shoulders like, really sort of like looking for, if anything, we need to really get a break of this. Let's get rid of these lines. Can't get rid of those lines. A break of the 13,000 level, as I said earlier in the show. So a little bit of sell-off. Doji candle now, so need to be a little bit aware of that, but I'm going to set shorts anyway, and look for a move. Yeah, that's about what we're looking for. I could be a bit more aggressive with a stop, maybe. That would improve the, where we're trading. We're trading at 13,090. 13,182. That's not a bad place to have the stop, is it? Just above there. So yeah, let's round it up. I like to round up things, give the stop a little bit more room. So we're selling at 13,092.5, targeting 12,842.5, 250 points on the downside, and the stop is 100 points, 13,192.5. That's my short on GER40. I'll get that posted up now. So yeah, quite happy with that one. Let's keep our fingers crossed and see how they play out. Remember that it's all a bit of fun, and don't get too involved if you don't know what you're doing. Right, today what we've got: US PCE price data and Canadian GDP. That's all we've got today. Next week, a busy week. We've got Reserve Bank of Australia policy decision, US manufacturing index, Federal Reserve, Bank of England, and then we got Fun Time Friday next week, the US employment report, non-farm payroll. November the 5th, the Saturday, Canadian employment report. Seems like a funny day to bring it out. Thought it would be on the 4th as well. It's normally on the 4th, but anyway, that's what we got next week. So I hope you've enjoyed the show. It's been a long one today, and yeah, be very careful out there trading. Lots of volatility about, and yeah, drop us any messages, and we'll get to, you know, try and assist you in the best way we can, and really sort of show you what we do here. Okay, guys, have a good weekend, and we'll see you on Monday.
cheers.